Hello dinar enthusiasts. Welcome to our channel, your premier source for the latest and most authentic news about the Iraqi dinar. If you're a dinar holder or someone interested in the dynamics of Iraq's currency, you're in the right place. Our dedicated team works tirelessly to bring you up-to-date information, expert analyses, and insider insights that you won't find anywhere else. Stay informed about significant developments, economic trends, and policy changes affecting the dinar. Today, we're diving into a fascinating and complex topic: the potential floating of the Iraqi dinar and its implications for both Iraq and international investors. This analysis is inspired by Intel Guru Frank26's recent comments on the subject, and we're going to break it down in detail. So let's start with the basics. A float in currency terms means that the value of the currency is determined by the open market rather than being fixed by the government. When a currency floats, it can increase or decrease in value based on supply and demand dynamics, economic factors, and investor sentiment. Frank26 suggests that the float of the Iraqi dinar is aimed at reaching a certain cap or target value. This is a strategic decision by Iraq's financial authorities, possibly influenced by various economic and political factors. But why is this such a challenging decision for Iraq, particularly for figures like Dr. Sinan al-Shabibi, the former governor of the Central Bank of Iraq? Well, here's where it gets interesting. Iraq is in a bit of a quagmire, or, as Frank26 puts it, a catch-22 situation. If the Iraqi dinar is allowed to float freely, it's highly likely to appreciate in value. This appreciation could attract significant interest from international investors looking to make a profit. On the surface, this seems like a positive outcome. A stronger dinar could mean a stronger Iraqi economy. However, there are several layers to this issue. Firstly, if the dinar appreciates too quickly, it could disrupt the economic stability within Iraq. Rapid currency appreciation can lead to inflationary pressures, making imports cheaper, but potentially hurting local industries that might struggle to compete with foreign goods. This could lead to job losses and economic instability, which are the last things Iraq needs as it rebuilds from years of conflict and economic challenges. Secondly, Iraq has numerous international obligations, contracts, and agreements that are tied to its currency. These include trade deals, foreign investments, and reserves held by other countries and financial institutions. A sudden and significant change in the dinar's value could impact these agreements, leading to financial complexities and potentially even disputes. Additionally, there's the issue of control. By allowing the dinar to float, Iraq's central bank would relinquish some degree of control over its currency. This loss of control can be risky, especially in a volatile global economic environment. It's a delicate balance between fostering economic growth through a stronger currency and maintaining stability and control over the financial system. Frank26 highlights the dilemma faced by decision-makers like Dr. al-Shabibi. They must weigh the potential economic benefits against the risks of instability and loss of control. There's also the consideration of Iraq's foreign currency reserves, which include significant amounts of dinar. These reserves are vital for economic stability and are used to back the currency and manage exchange rates. Any misstep in handling the float could jeopardize these reserves, impacting Iraq's financial health. Furthermore, international investors and entities that hold Iraqi dinar as part of their reserves are closely watching these developments. Their actions will be influenced by how Iraq manages the float, adding another layer of complexity to the decision-making process. In conclusion, the potential floating of the Iraqi dinar is a highly complex issue with far-reaching implications. It's not just about increasing the currency's value, it's about balancing economic growth, stability, and international obligations. Decision-makers like Dr. al-Shabibi are in a challenging position, navigating a web of economic factors, political pressures, and strategic considerations. As Frank26 aptly puts it, it's a catch-22 situation, and the path forward is fraught with challenges and uncertainties. Thanks for watching. If you found this analysis insightful, don't forget to like, share, and subscribe for more in-depth discussions on global economic topics. Let us know your thoughts in the comments below. We'd love to hear your perspective on this intriguing issue. Till next time, stay informed and stay curious.